Okay, so are you thinking about expanding into Amazon's international marketplaces because you currently sell on Amazon in the US and you're thinking, well, maybe I'll go into Canada or maybe I'll go into the UK. Which one should I go to first? And so I'm going to give you a variety of things to consider. My name is Kevin Sanderson from Maximizing E-commerce. I myself have been selling on these marketplaces since at least 2016. And I also help sellers expand into international marketplaces. So I've gotten a good grasp of what works to expand in marketplaces like these two, which I think for most folks tend to be the winner. Most folks that I talk to and have helped out, either Canada is their number one marketplace or the UK is their marketplace. So the question is for you, if you're deciding where you want to go next, what is going to be the best marketplace for you? So let's get into some things to consider when comparing the two marketplaces. So first off, let's talk about population. So really what it comes down to is, the US, for example, is roughly 330 million people. So when you compare the demand and the potential, the first thing you think about is, okay, what is the population? So in Canada, the population is roughly 38 million people, which is about the population of California. California, I believe, would be one of the largest GDPs, gross domestic products, in the world if it was its own country. So California is no small state, and Canada is really no small country. It's a lot smaller than the US, but there is a lot of potential there. Now, almost twice the size population wise is the UK. And those are my horrible drawings of a Canadian flag and a UK flag for reference. So in this column here, we're saying there's about 67 million people roughly. So that's a little less than twice the population of Canada. Now, but what about the potential for the market? So this is a totally hypothetical number. And just to make the lawyers happy, you will never know what your actual sales potential is until you actually go into a marketplace and test out the market. There's so many different factors that are involved. But generally speaking, people in Canada and the UK tend to buy similar products to what people buy in the US. So in Canada, the potential tends to be around 10 to 20%, sometimes less, sometimes more, especially for the products that you sell in the US that you decide to expand into Canada. And so in the UK, I find the sales potential tends to be around 10 to 30%. And so, however, there are some caveats to that I think makes it so your sales will actually, or sorry, your profits tend to be better in Canada, and your sales oftentimes are better in the UK from what I've seen with a lot of folks. So you might end up with the same amount of money either way. So really when I say profit, your margins would generally be better in Canada. So there's pros and cons of each, but let's get into some more of why you might consider one country over the other. So the thing that really scares a lot of people into going into foreign marketplaces is tax. And so generally speaking, there's two buckets of taxes. There's income tax, which you pay to your government based on the profits that you make. And then there's also the sales tax, which is going to be something that usually is owed to the local government where the customer is. And I'm grossly oversimplifying it here. But again, from a very gross oversimplified way, there's more moving pieces with a lot of this and potentials. But for the most part, it's pretty much black and white. With the Canadian Revenue Agency, if you have at least 30,000 Canadian dollars in sales, which let's call that 23 to 24,000, you must register for GST HST. So what on earth is that? It's the goods and services tax, harmonized sales tax. That is added on top of your selling price. So just like in the US, when a customer sees something is $20, chances are they're probably not going to pay $20 because they check out, and then whether it be 8%, 5%, 13%, it all depends on where the customer lives. They're going to have basically that alphabet soup here of sales tax added on top of their selling price. And so this is administered at the federal level. So the federal government in Canada has the GST, HST. And for most sellers, if you have, like I said before, at least 30,000 Canadian dollars in sales, and that's not just this confuses some people. It's not just your sales in Canada, it's your worldwide sales. They frame it, they word it as your taxable supplies, and taxable supplies, let's just call inventory. So based on your inventory, if you have somewhere in the world, which chances are, if you're thinking about selling in Canada, you've probably already crossed that threshold in annual sales of at least 24-ish thousand in US dollars. But again, the nice part is that's added on top of your selling price. Now, in the UK, they have what's called value added tax. And so that is going to be included in the selling price. And this really throws people off. So just to give an illustration, so there it's a 20% value added tax. And sometimes when people are talking about value added tax, especially if somebody's in Europe and they're trying to describe value added tax, it gets real convoluted very quickly to folks on this side of the pond. I'm in Florida, whereas most folks in the US and Canada and even sometimes Australia that I have spoken with, it gets real confusing when we're talking about value added tax because it's included in the selling price. So to give a good analogy of what that would be and how this gets administered to the customers is if I was at a stadium, let's say, and somebody was walking up and down the aisles and they said beer for $12 or something like that. If I gave them a $20 bill, they're going to not say, okay, well, let's add the sales tax on top of that. If they said it was $12, generally speaking, the way it works in that arena, which I guess would be a stadium would be arena, but in that format is, I guess, the word I'm looking for. In that format, all they're really doing is they're going to give me my $8 change and take that $12. And then in the back end, they're going to back out the sales tax. That's how it works with value added tax. So every price you see on Amazon.co.uk, .de, .it, .fr, all the European marketplaces, every country is a little bit different, but just to make it very simple, in Europe, if somebody had the price added onto the selling price, they'd be like, "What? Why are you doing that?" Because everything is customarily included in the selling price, and that's the way it works on Amazon. So your value added tax is included on your selling price. So just be very careful when you were pricing your goods that you were including that, and it is 20% in the UK. So to walk through that math of how you would back that out, I'm going to use 24 pounds as the selling price. So 24 pounds as the selling price would have in it actually 4 pounds of VAT, and the price before VAT would be 20 pounds. Hopefully that made sense. So the VAT inclusive price is 24 pounds. The VAT exclusive price, which is the phrasing that they will use, is 20 pounds. Now, what trips people up, and sometimes this will affect your margins, is that the selling price that you're advertising is with the 15%, which is actually 15.3% over there for most categories for the referral fee. So that 15.3% referral fee is before you back out the um, value added tax. So that is one of the factors that plays into how I find most people tend to have better margins in Canada than they do in the UK, but it just depends on the product. One of the things I will say in UK's favor is that your fulfillment fees generally are less expensive relative to converting it back into US dollars than they are in Canada. So that is one nice thing. Now, the interesting thing is also on this is how often you have to do filings here. So I would say, and this is not a bullet point I added on here. So GST, HST is for most folks going to be on an annual basis that you will be doing your filing for GST, HST. I know a lot of sellers just end up doing it on their own. There's, I think, 3 or 4 boxes where you would put in numbers such as your sales, the GST, HST you collected, and then if you have any credits. So you get credits for certain things, which talks to a tax advisor. But generally speaking, a lot of those tend to be things like import VAT that you pay. If Amazon is charging you GST on top of your FBA fees, generally that would be something that would be considered on top of it. Be a credit, GST on top of your PPC. So just look into those types of charges, and of course, talk to a appropriate tax professional as to whether or not that would pertain to you. But a lot of people end up DIYing it. I would never suggest to someone to try to DIY VAT. There's a lot more moving pieces. It's on a quarterly basis, there's a lot more mistakes that could be very easily done. So I would highly recommend you have someone help you with that. Don't try to do VAT on your own. Also, from the complexity of registering for these, there's a form you fill out with the Canadian government. You say, here's my form, it's signed, here's my articles of incorporation or whatever the formation documents are for where you live. You fax that, and yes, I said that correct. You fax it to the Canadian government, and then 4 to 6-ish weeks, sometimes less, sometimes more. They come back to you and say, here's your registration numbers for GST, HST, and then you'd also want an import export number on top of that. So, and it's pretty seamless. They don't really come back and fight you a lot unless they have questions on something on your application, but they're super friendly and super helpful if they do have things that they want clarification on, in my experience. The British government has got an interesting take on the VAT and registration. So my understanding of how things work over at HMRC, which is Her Majesty's Revenue and Customs, which is like the IRS, let's say, or the Department of Revenue of the UK. Years ago, they put pressure on Amazon to have all the sellers register for VAT. And Amazon said, okay, sellers, you got to go out and register. So all these people went out and registered. So they expected, like, oh, okay, now if we've done all these registrations, we would expect a certain number of people to file, and we would expect a boomerang effect of a certain amount of money coming in taxes. And apparently that didn't quite happen. So rather than going after those sellers, what they decided to do was make it a little bit more complex to register. So it's not just, hey, here's my information, give me my number. There's a lot of things like screenshots, invoice for this, shipping invoice. They want a contract actually for shipping. There's ways to kind of navigate that, which can be a little complex if you've never done it before, but definitely have somebody help you with that because it can be a little confusing. Sometimes even trying to just understand what it is that they're asking for. But VAT is definitely something you want to have. And Amazon does most of the remitting of the VAT for you. So they'll send it to the UK government, but you still have to have a VAT number. In fact, if you don't have a VAT number within 90 days, or at the time we're recording this, I've seen them send emails to people that give them an extra 30 days to 120 days, as long as they can prove that they have an application actively filed with the UK government. And so, they will suspend your account. And I've seen that happen to folks. So don't let that happen to you. And that's generally from about the time the goods arrive into the warehouse, because in the UK, that's a triggering factor of needing a VAT number. And so I know I just spent a lot more time on UK than I did on Canada with the GST versus the VAT. And that's because VAT is a little bit more complex. And so I don't want to confuse you too much on that, but just talk to a appropriate professional about that. Currency is Canadian dollars and British pounds. So is the currency for the UK. So even though they use the term dollars in Canada, it's different. Now, one of the things I will caution you on is if you're ever talking to service providers in Canada, make absolutely certain that you understand whether they're quoting you in US dollars or Canadian dollars. For example, if they said $1,000 and you thought that was 1,000 Canadian dollars, that might be like 750, 780 ish, somewhere around that dollars, US. But if they were saying in US dollars, that would mean $1,000, which would really be closer to, let's say, 1,250 to 1,300. I'm using approximations because the currency tends to fluctuate between about 1.25 to 1.3 to 1. Now, so that means like if you had 1,000 US dollars, you would multiply to get to the Canadian dollars and you would divide using that number. So one of the tricks is if you're ever converting Canadian dollars, the Canadian dollar historically will always be a larger number than US dollars. So sometimes they'll give it to you as a number bigger than one, and sometimes they'll give it to you less than one, depending on whether you're saying CAD to USD or USD to CAD. And that's with all currency conversions. So just make sure you understand what direction the currency should go to make sure you did your calculations correctly as well. Now, British pounds is historically been around the opposite direction, but using the same numbers. In fact, one time I was listening to a podcast where somebody had sold their business and they went back and they redid the numbers and they realized that their team had, when they were doing reports for years, wasn't converting Canadian dollars and British pounds. They're just putting everything in the same as if it was US dollars. But because the sales were similar in both marketplaces and the direction that the change was between US dollars and British pounds and US dollars to Canadian dollars, it ended up kind of balancing itself out. That doesn't always work. So don't take that as like, oh, I won't worry about that. Always make sure you have good numbers. But Canadian dollars should be, for the same amount of money, if converted, should be a larger number than US dollars, whereas British pounds, going the opposite direction, should be a smaller number at a similar ratio. So it's just kind of opposite, and don't get too wrapped up in the ratio. Always check, USD to CAD or USD to GBP, but that's the gist of it, is that a little trick with currency is that to make sure you're converting it right, because sometimes it can be confusing. Do I divide or multiply? Just make sure, as far back as I've been doing this since 2016, Canadian dollars have always been a larger number than US dollars, and British pounds have always been a smaller number. Now, a couple other things to consider as well is that this $38 million or $38 million, this 38 million population, it is smaller than the UK, but there tends to be less competition. I think a lot of times people, when they say, oh, I want to go into Europe, and so then they say, I want to go into the UK and go into Germany and go into all these other places. So a lot of times people skip out on what is a really good opportunity in Canada. So I think a lot of times people skip it. And so there tends to be less competition there. And also, I think the buying habits of people in Canada are more closely aligned with buying habits of people in the US, because I've never seen an exact number, but I think it's somewhere between 70 and 90% based on relatively accurate places that I've seen. The 70 to 90% of the population in Canada lives within 100 miles of the US border. So it's a very American similar population, I should say. So these are all things to consider as to where you're going to go next. The fact of the matter is, just pull the trigger and decide, where do you want to go? And you just got to make a decision. I personally recommend to most folks, start in Canada and then go to UK. I think I outlined here, hopefully, that it's a little simpler to start in Canada than it is in the UK. It's going to be more similar to how you do things in the US when you go to Canada than it is in the UK. Just, the way the taxes operate, the way the customers think, tends to be very similar in Canada than it is to the US. Whereas in Great Britain, they're at least still speaking English, but I mean, it is their language. But after all, starts to get a little different. They use different words to describe things more likely. The government is a little more bureaucratic, and that you're going to find that pretty much across Europe. And I don't mean that as a knock. It's just, there's more hoops you have to kind of jump through sometimes to get things done from a front end standpoint. But the nice thing is, with both, because there are things you have to do on the front end, it makes it so you have less competition, because not everybody wants to do that. And so both countries are generally going to have less competition than the US. And so I find it easier to launch into new marketplaces. So if you're thinking about expanding into new marketplaces yourself, I do have a course. It's super dirt cheap down below. For just a few bucks, you can sign up for the Global Profit class. We'll show you a little bit more about how selling internationally could be the best way to impact your bottom line and your sales and your cash flow. Share with you a little bit more on how to get started, as well as I'll give you the good, the bad, and the ugly, and some potential things to think about with, the potential pitfalls that might come up and how you might avoid some of those. So all you got to do is, in the description down below, sign up for the Global Profit class, as I'm dropping things here. But thank you so much, and I wish you the best in your e-commerce journey. If you found this video to be helpful, please also consider liking and subscribing. Thanks. Bye-bye.